Welcome to Impact Headlines. Global tourism to generate $10 trillion in 2023. Sharp fall in Eurozone inflation. Oil prices impacted by supply cuts and possible Iran sanctions. The World Trade and Tourism Council predicts that the global travel and tourism industry will generate about $10 trillion by the end of 2023. According to Julia Simpson, President and CEO of the Council, the global tourism market is expected to surpass the $15 trillion mark within the next decade. It noted that despite the ongoing efforts in China to fully reopen its travel and visa processes, the sector's performance has exceeded expectations. Impact on Sri Lanka. This is great news for Sri Lanka. In the first 10 months of 2023, over 1.1 million visitors arrived in the country, significantly higher than a year earlier. Sri Lanka tourism has a full-year target of 1.55 million and expects to earn about $2.7 billion. Eurozone inflation fell to 2.9% in October, a more than two-year low. An 11% drop in energy prices mainly contributed to this decline. A steady rise in interest rates, 4.5 percentage points since July 2022, impacted consumer prices. However, Reuters is reporting that such a sharp fall has other possible implications, namely a potential recession, with the Eurozone economy contracting by 0.1% in the third quarter. Impact on Sri Lanka. Europe is Sri Lanka's second largest export market. In the first 8 months of this year, exports reached $1.8 billion, down almost 19% from a year earlier. Further, Europe is a key tourist source market, bringing in about 500,000 visitors to Sri Lanka each year. Oil prices remain volatile as Saudi Arabia and Russia said they would maintain their oil output cuts until the end of the year, and due to concern of more US sanctions on Iranian oil. Reuters reported that despite this, Brent and WTI contracts fell last week as the geopolitical risk premium faded, with US diplomats meeting Middle East leaders to limit the risk of the Israel-Hamas war causing a wider conflict in the Middle East. Impact on Sri Lanka. Rising oil prices come at an unfavorable time for Sri Lanka as it seeks to build its foreign currency reserves. Reserves have improved in recent months but are just over 2 months of imports. In September, the government relaxed purchasing fuel under the QR code system, driving demand higher.